All right, thank you once again for choosing Momentum Master. Today we're going to go over the features contained within Momentum Master B. First of all, you want to go to get yourself a TradingView account. If you don't know what that is already, you go to tradingview.com, go to the billing section, and you'll be offered multiple plans. I already have the highest plan, so the free one doesn't appear here. You can get the free one. It allows you to have 3 indicators and 1 alert, if I'm not mistaken. However, the Pro plan is not that much money per month, and it allows you a few more indicators, 2 charts in 1 layout, and more alerts and multiple time frames that you're not allowed on the free one. Even if you choose the free one, our dynamic alert system will alert you to everything within overbought and oversold, so it is made for the budget users as well. And once you purchase the indicators, you'll go over to your indicators section, which is up here in the top left. Go down to invite only scripts and you'll see it listed down below here. Okay, and then you'll click on Momentum Master B and you'll see it appear down here at the bottom. Now I'll just go ahead and do it fresh so you can see what it looks like from the start. You add it like so. And you'll see that a few of the features have been turned off so that it's not so busy. First of all, we're going to go over in detail first what happened last time since last video. Last video, as you recall, there was a rocket ship. Let's see how that played out. Whether you were a scalper or a long-term hodler looking to scale in for a market reversal, here was the first rocket we saw. Here was the one that we saw live, and we didn't stay around to see it, but you would have seen a fair return of a percent, 1.2%. Lock in your profits. We were overall in a bearish sentiment, so looking for a double bottom. Without having a double bottom on this higher time frame, it's highly expected. That's why you lock in your gains. You would have seen also fatigue on the trend cloud as we talked about. So that is one where you would have seen profit immediately from where the rockets appeared without having to suffer drawdown at all. All right, and then when there's more than one rocket that appeared, so we're going to go through where that occurred and how we predicted basically the bottom of the market. So this was our second rocket, played out for a percent. You lock in your gains because you didn't even manage to make it above the adaptive moving average. You could have reversed position and seen these reset. They go for a stop loss hunt. And if we were to go to this as a replay, I remember there being an alert that appeared here too. We already know that these things are done in real time as leading things, not repaints, because we saw it on the video. This one had one here. There, right there. You had another rocket opportunity. So you would lock in your gains every time, like here, and you lock it in. That's a percent without any going below that point. And here you are again. And this is basically the market reversal. So I wanted to prove how the rocket ships play out. I was waiting for a significant play out of the market before I made this video to prove and immortalize in stone that these rockets are real. Okay, so even if you had just taken this rally before the end of the new year, that's a 4% gain from there. And basically these immortalized rocket zones, it never went below those points. So those entry levels here, here, and here, those are basically your key points. Like, I'm not going to spend so much time here. Let's just go to where we are in the current moment in time. And we know the rest is history from New Year's. So we'll go to a higher time frame so it's not so garbled. as we know that the rockets appear in candle close, so those rockets disappeared now on the higher time frame. That's why you want to look for clarity on the lower time frame. And sure enough, you have a huge play out from that rocket down here to here with literal no drawdown, 7% on Bitcoin. And this happens all the time on any asset in the world. All right. So, yeah, I think we've proven that these two are great. So we're going to just go back and apply the B structure. So you're going to notice a lot of times where these things play out and then there's a liquidity grab, and that's where your real entry would be occurring. Or if this is one entry, then it starts fatiguing here, you always look for double bottoms. I mean, this is other standard TA practices with other systems, so this works in tandem with that. So with B, what you're going to do, as you saw here, is we're going to go over each formula one by one. So first of all, we have the PVSRA candles. The PVSRA candles are what color these candles up here. And also it appears down here. You can change how you want the histogram plotting size, how big you want it to be on here, these candles down here. And yeah, PVSRA in short, the colored volume candles show 200% of the previous 10 volume combined, and the blue and purple show the previous 150% of the previous 10 candles combined. So you had three large vector candles to the downside. You had divergence on the money flow and the RSI. So we're going to skip to this right here. The white line here is the RSI, or the relative strength index. Then you have the gray line, which is the money flow index, better known as the volume weighted RSI. I overlay them because you can see where they deviate from one another, and when the money flow goes below the RSI, it tends to get a boost up. If that coincides with the stochastic RSI is a amplification of the RSI. It's a formula which amplifies these peaks and valleys here and shows overbought and oversold. So when you get these confluences together, it color weights your background. So you see this purple getting darker and blue getting darker, and it also coincides with another feature here, which is, so that is the Williams percent R. This appears down here at the bottom. This is a sensitive stochastic formula which shows strength, and this also, as you see, color weights the background. So this layers where oversold and overbought regions occur on top of already color weighted backgrounds on other indicators. And the Williams has these crossover events where you see the rising sun appear. There's going to be some sort of shift potential happening, and conversely, if you see an alarm on the crossovers here, there's another potential downside shift. So this is when you see certain things with the stochastic suppression of these stochastics getting suppressed and not taking off. It's because the Williams might likely have to come down in those cases. Okay, so you have, these are your basics, your Williams, your money flow, and your RSI, and your stochastic RSI with the PVSRI candles, and the background weighted, color weighted, oversold and overbought regions, and the crossover alerts for the Williams. And so when you get these crossovers, and this leads me to the next thing, which is the divergence formula, handwritten by Scratch, and you have regular divergences on the RSI, and you have regular divergences on the money flow and hidden. Of all the divergences I've back tested, these are the two most accurate when worked with together. So when you see these divergence crystals, it's going to draw the lines for you where the divergences occurred, because you should be able to know how these are calculated by your eye. So it's training you to see divergence, how it actually occurs. And when you see them together like this with the dual diamonds together, uh, a opaque diamond is regular divergence, and transparent is hidden divergence. So the somewhat clear diamonds, like back here, for example, back here, this is hidden divergence, regular divergence, hidden divergence, regular. I'm a visual learner, so I prefer things to be kind of have some interesting story, like a rising sun and an alarm clock. But yeah, that's just me. So you had the money flow going beneath the RSI, and it had a divergence, and the RSI had a divergence, and you had this shift in, you had a crossover here on the Williams, and sure enough, and we were tapping into a liquidity pool over here, and there was a rocket occurring as I showed you, and sure enough, we surged out and we hit the cloud, which was thick, so that would have been a lock in your gains idea anyway, because you don't, if it's not thin, it's going to consolidate anyway, so you pay yourself, and then you move on some more. So we're going to go see that again. You had a rising sun down here, and then it consolidated on the end of the new year. Let's go, this is a 4-hour candle, so we're going to go to a lower time frame here. This also had, I was watching this in New Year's, posted it to a different group, and was showing the bottom of total on the 3-minute, but Bitcoin also had a rocket ship, so let's go find it. Once again, you find these things more likely as the candle closes, so the more chance of that stochastic reset occurring would be on a lower time frame. So you're going to look at the lower time frame in conjunction with divergences on the money flow and these high volume trades playing out and crossover alerts. So the A and the B and the ultimate and they all work as 3 in this suite. All right, so first of all, you've had this drop to the downside. You were getting fatigued on 4 time frames here. 4 and above is a pretty high likelihood of something happening. You were getting overbought, and you came down. It was a wild stop loss hunt towards the end of the year as people were doing their taxes. This is why the rocket took so long to play out from the first time. But there you go, there you go. You see these rockets playing, and let's stop it. All right. So the rockets appear, it triggers a stop loss hunt, and then by the second or fourth or fifth rocket here, this is where your highly likelihood is about to occur. And you see the stochastic, and this would be a perfect time to show how the stochastic RSI and the higher time frame stochastic RSI work too. So I created a formula which now can look into the future, look above into a higher time line and look below into a lower time frame, and you can overlay that on your stochastic RSI and see where they stand. Okay, so let's just go into this really quick. So you have this orange and yellow as the lower time frame stochastic. It gets narrow because it's a smaller time frame, so the differential gets smaller. And the higher time frame is this fuchsia teal neon colored one, and it's higher energy, higher time frame, so it's a higher energy blue and purple is the way to look at it. So this higher energy blue and purple light gets in coalesces together. They double bottom, everything double bottoms right here. You get this heavy purple just looking at the B alone, and you're seeing all this volume, this selling pressure on the PVSRA. You're getting these crossovers. You get the Williams going even lower. You could look at this as almost a price action thing. The Williams is derived through price action, by the way. So you don't even need to look at price action. You could just look at the B if you were so captivated by these lines, and you could take it to another level, and you can see inverse head and shoulders, which play to the upside on price action on the Williams. And so you get these rising suns that appear in certain ranges which historically play out. So these alarms are alarming for a reason. And so seeing these 3 here with everything getting to an extremely oversold region is your literal bottom of the Bitcoin price. And so here you would have seen these rocket ships. You could have taken even the second or the third point here, and then we're going to go into how you would basically see how the DEMA and the TEMA were changing the baselines. And there you go. This is a textbook entry. And this is also on the website because you'll see this over and over and over and over again. And you just play it. So you see the rocket ships, you'll see the crossover. It plays out nicely. It gets above the cloud thins, it kisses the cloud again, and it's gone. And so you could take profit at a certain region, wait for the kiss, and re-enter again. Here it fell through the cloud. So that's why you always pay yourself. So you see it come up and you know it's going to come back and kiss. So why don't you just pay yourself and look for a re-entry? And so if you'd already be in profit, you could risk another long here if you trust in the image of the New Year's reversal idea. All right, so we're going to use this in conjunction with B though. So you see there's no real divergence that's occurring yet, but over here at this 6, there's a highly likelihood of a reversal happening because you had double divergence on the money flow and the RSI. So you had the money flow here, RSI here, regular divergence. You had the bearish divergence get negated by bullish. You had the double bottom on the Williams with the crossover again. And sure enough, that was where it all began. But actually, we're not at New Year's, so there's probably another. Yeah, that was where the big one came. So we weren't at the New Year's time yet. So now we go back down here, another rocket appears. So once again, you just play these all out. Like if you're the swing trader who has a life and you can't bother, so you're just playing the daily, so be it. You can just wait and you'll get paid later, possibly too. But in this market condition, it's best to just lock in the gains. So you could have had a 1% here and then re-entered on another rocket there. And it's basically the same region. And the double bottom is the more secure bet. So now you have the double bottom in your favor. Triggered the stop loss hunt. So you had this rocket appear. The stop loss hunt went into effect. They went down to the previous rocket range. And that's where it was gone. So by this idea alone, I was posting in a Discord group while everyone was bearish. I was saying, I don't know, I trust the rockets. And sure enough, it played out. So we're going to go look at the B really quick. So let's try to look for, what I was seeing was 6-hour divergence. So this was where I was starting to see some divergence on higher time frames that was cascading, and I was also seeing the bullish hammer here on the close. So this was telling me a market reversal potential was in. It was on the 4-hour maybe? No, it was the 2-hour. That's what it was. Sorry. Yeah. Here you go. The 2-hour. This was the powerful time frame. So the beauty of having the divergence automatically drawn for you is you can flip between time frames to try to find that frequency of the market maker. So here you had the double divergence, the liquidity grab, your standard inverse head and shoulders, the head, whatever pattern you want to call it, the double W pattern from here. It's all the same different word for snow. Eskimos have 40 words for snow. Traders have 40 ways to see the same thing. So this is just another confluence thing that's quicker. So you have a quick coded divergence, two on both the money flow and the RSI. Boom, you have a bullish doji, and that was your literal bottom for the current moment in time. And yeah, so it's a very simple thing, and you can look at that. So, one more thing, you don't see the higher time frame being drawn. So the higher time frame is not going to draw on these broken time frames. It's going to do it on the majorly traded ones like the hourly, the 4 hour, the 15 minute, the 30 minute, the 5 minute, the daily, things like that. So in the Discord, we'll tell you exactly how they correlate if you're so inclined to ask. And you can ask that too. So you get all these divergences where these continue and they bounce off the ATR and the things that we've laid out in the other indicators set. And you get these bearish divergence that sometimes get negated too. But right now we're seeing this occur. We're seeing the bearish divergence on both these and the Williams getting a little bit high on this 2 hour. We have an hour left to close this. Let's go to a time frame where we can see the higher time frame. So this is a perfect example of suppression that could occur. So you have the higher time frame, which is the daily here in teal and fuchsia, kind of pushing down potentially the 4 hour momentum, and you're getting bearish divergence occurring and possibly the volume falling off here. So a potential weakness as this Williams would like to reset. So this might have another alarm and then fall down to reset this. You get high on the Williams, you have generally a pullback of some kind. It can't stay up forever. So this is, and you get the two baselines above the price like that, and you're getting a crossover now, the leading indicator cross. Yeah, this is what you like to see when you're trying to go short. So you look at the 15-minute, and since you have the indicators, you don't need to switch to them. You can see right here we have a somewhat oversold 15-minute and hourly. The 4 hour still has a little bit left in the tank, but it is pointing down. The Williams is high, so this is kind of a high level idea for a short right now, or a retrace. We're approaching Thursday as well. You got the alarm crossing here too. You got this weakness showing on the baselines here. So I'd expect another hit to the high here somewhere around this region. And so this is where TA is, indicators alone aren't going to give you the answer. They're going to give you the speed to make the decision that you need in that moment and to get out, pay yourself, and switch sides. Or, it's their tools to add clarity, ideally. So if you layer these as you see fit, take them off, put them back on. Don't confuse yourself. Take your time. Watch the video multiple times. Try to understand what each of these factors is. It's not as complicated as you think. It looks like a bunch of squiggles at first, but just like anything, you have to train your eye. And the more you train your eye, the more information you get in one image. I'm all about consolidating everything into one image so you don't have to get the puzzle pieces in four different corners of the room. You have the puzzle pieces all laid out in the center of a coffee table ready for you to put together right in your face. So yeah, the Japanese say ichiji ga banji, which means each one moment says 10,000 things. And that's what I like to see. A moment that shows me a narrative that's unbiased and wide in its scope and vision. And that's what you get with these indicator suites, is you get a scope and vision of where price likes to gravitate up or down towards, and gives you key levels in the palm of your hand and alerts alongside it. And that was the Momentum Master B walkthrough. Let's see if we missed anything. Oh, yes, the MACD. This is a hidden little gem that took me ages to program, that I did not know what the use for this would be, but I wanted to see how the framework of a MACD in a 100 to minus 100 framework would look like, and whether there's interactions that occur. So you have this leading MACD formula that sometimes interacts with the stochastic, but it's not really that useful? The only use for it is here. Go to your three dots here, hit add alert, and then you can choose between pump and dump. And since this is a leading MACD, and you say once per minute or once per bar close, and what it's going to do is tell you when the MACD lines cross. And these MACD lines are ultra sensitive because they're set in this framework, and they're also, the settings are tweaked to be leading. So it's a leading MACD that lets you know when the MACD lines cross. So if you're interested in an hourly cross, you set it on the hourly time frame, which we are currently at here. You see the hourly. But if you want to switch to a lower time frame, you go to the lower time frame and you set those MACD crosses, the pump and dump, on that as well. You go once per bar close, once per minute. I do once per minute, or actually once per bar close, because I don't want to get inundated with alerts. And then if you have your phone off, if you're at a meeting and your phone's off and the last one you see is dump, it means that the lines crossed down and there's volume leaving. If you see pump, they crossed up and there's volume coming in. It's kind of nice when you're not able to look at your phone or something and you just want to see if it's still in your favor. So that basically I just have these three alerts and they're constantly letting me know every time. And that's all you need on whatever asset in the world. And it keeps you plugged in like the Matrix. So here we go. And that's basically it for that. And you can also put stylistically, if you want the MACD histogram, you can put the histogram on here too. So you can have a histogram, but I don't have it on. You can change which EMA you're using. I'm using the EMA. Some people use SMA. You can choose that. So that's the other hidden feature that I don't advertise on the website, but it was an interesting one to program that you get as well. So we could see this one last hurrah up to this region and then fatigue to the downside because you have the hourly and the 15-minute still in your favor, and you're getting that small time bounce, and you're getting hidden divergence on the money flow. See that hidden money flow divergence? That's why it had the hidden, and then it broke through stop loss hunt, and then you could see like a little surge up for the setting of the shorts for New York. Okay, so that is about it. So you'd see this kind of surge up to here to test the highs one last time. And let's look at some higher time frames and call it a day for the Momentum Master B setup. So you got the daily not in your favor at all, and you're getting overbought on all of these things, all of these indicators. And if you go to that and below, the 22-hour also spent, looking to come down. We're tapped into this. They probably want to like try to consolidate this other half of the candle or something. That's generally how these things work. Maybe coinciding with that fair value gap over there. Okay, so, but yeah, you're getting overbought on all of these things as you see by the blue. So it doesn't train you to, it trains your eye to not be biased to price action, so you don't see these green candles and think upside is guaranteed. You see everything is getting overbought and eventually it's going to come down. So you should be realistically looking for a short right now. And you're getting these alarm crosses. So this region here is an area of interest for me. Even here, just somewhere in there for one last hurrah to set it up. And that's basically it. You get the auto divergence, you get the higher time frame stochastics, you have the Williams and the alerts, you have the MACD, the PVSRA, yeah, and the color weighted backgrounds. And everything can be toggled on and off. So If you don't want so much going on, just take it off. But sometimes you can see the interactions between them. Sometimes the the places where the time frame fatigues out happens to be where a higher time frame was. Like if I turn on a higher time frame here, you're going to see most likely something. Well, here, for example, it bounces off of it. So you can see times where it gets energy from the higher time frame and goes up here. Let me just go over that with the OK button. So you see times where it comes back and the higher time frame's in its favor, and then that's where you bounce out. Goes on the higher time frame, bounces off the higher time frame. Goes on the higher time frame, bounces off the higher time frame. Here's where it falls through the higher time frame, but yeah, you see how the higher time frame energy can provide resistance or support. And here we're at a resistance point, and the higher time frame's getting rejected. The current time frame's getting rejected on the higher time frame. So you're seeing a sense of fatigue by watching the higher time frame stochastic. So it's not just there for show. There's kind of a story that you can see from the lower time frame kind of trying to push it up and the higher time frame trying to push it down, and you can see how momentum gets pinned by other time frames. And that's about it. Hopefully you understand the things within it. Once again, we appreciate your uh, considering Momentum Master, and good luck. Thank you very much. Peace.